We have something very interesting for you indeed. Our next session is a rare opportunity for you to learn about the basics of putting together a trading system, even if you have never traded before. So I'm going to put you in the good hands of Mr. Jay Tun, the founder of Swim Trading, to introduce his panel of 3 experts. Jay, over to you.
Right. Thank you. Thank you, Edward. All right. Hey, ladies and gentlemen, welcome to the Singapore Trading Festival. My name is Jay. I'll be a host for this panel discussion today. So today, right, it's not about me, it's about, learning from our esteemed speakers on this panel, which we will be sharing with you how you can discover the ABCs of trading system and how they can help you to grow your portfolio. So first up in this panel, we have Binni Ong. So Binni is the chief trainer at TerraSeeds, and I think she will be a very familiar face around all of us. She's an SGX Academy trader and has been featured regularly at talks across banks and financial institutions. Also, she has been frequently quoted by newspaper for her views and analyses on the market and can be considered an authority on today's topic, as she is a consultant and developer of many algo and quant systems. So Binni, over to you. Please say a few words.
Thanks a lot, Jay, and nice to be here to talk about familiar topics of myself. So I like to, thanks a lot for the chance to be presenting in this session. So I just take upon some opportunities to introduce trading systems. And some of you might be using it, but some of you might be new to it. So, but I think that I have 2 experts here, including Jay as well. I think he's also trading. So I hope that with this panel, we can talk about more things that's of interest.
Great. Thank you, Binni. So next up, we have Choi. So Choi, right, is a personal friend of mine, a top-tier Remisier from Phillip Securities, and he too is an SGX Academy trader, and he frequently shares his insights on the 938 Live. So personally, right, his comeback story, trading his way out of a 740,000 debt, is nothing short of inspiring. And today, we will be having the good fortune, right, to hear from the man himself on how exactly he used his trading system to get himself out of the debt. So Joey, over to you. Please say a few words.
Hey, hi, thanks, Jay. Hi, everyone. I'm so glad to be here today. And so my name is Joey, and I've been using trading system for a couple of years now. And I believe it kind of like makes the job much easier. It's a bit more systematic, and it saves us a lot of time. So in this special session, we'll be talking about trading system, how you could think about engaging one as well, build a plan on your own. And if any questions, go ahead to ask in this little app, and we'll be happy to share more with you guys, man.
Awesome. So finally, on this panel, we have Marcus. Marcus, right? He is the Vice President of Cross-Asset Listed Distribution, Asia Pac at SocGen. Basically, he is responsible for product management, sales, marketing of the DLCs in Singapore, together with warrants and callable bull-bears contract in Hong Kong. So prior to this role, Marcus has spent over 7 years at Singapore Exchange, managing the range of structured products listed on securities market and driving the distribution of research content after graduating from the SGX Management Associate Program. So Marcus, over to you. Please introduce yourself to our audience.
Hi, everyone. So I am the black sheep here among all the top traders, Joey and Binni. But we work together very closely with Binni and Joey. So they thought it would be nice to put us all into a panel together. So as what Jay has mentioned, I'm from Society General. We are a structured product issuer in Singapore. And what I am proud of this organization, proud to be part of this organization, is because of its innovation. We are the first issuer to launch the DLC's daily leverage certificates on SGX in 2017, offering Singapore investors leverage exposure to a wide range of Singapore and Hong Kong indices and stocks. And this marks our 5th year for the DLCs on SGX. And what better way to celebrate it than to expand our underlying coverage to a new market with the DLCs on US equity indices that we launched earlier in March. Yeah.
All right. Great. So ladies and gentlemen, please give a warm welcome to all our speakers, Binni, Joey, and Marcus. And let us kickstart our discussion for today. And before we do that, right, as and when you have a question, on your mind, right, you can always use the Slido and, input your questions over there. And later on, we will have a specific Q&A segment whereby we will answer all the burning questions that you may have. So do engage with us and ask us any questions you have. And this is for you to get the greatest value out of today's session. All right. So to kick off this discussion, right? I believe the audience will be very keen to truly understand like what a trading system is, because to me, right, when I first started trading, that was like 12 years ago. When I hear this word about trading system, I always like got a picture of a computer and thinking, wow, that's like very foreign, very alien. What exactly it is? So to kickstart this discussion of what is a trading system and what are the different types of trading system, and probably I would like to direct this first question right to Binni. So Binni, would you take this question?
Okay, that's good. Just give a bit of a background. When I first started, that was about 20 plus years. There's no trading system. We throw a stone and that's a trading system. Because I first started in the cloak market, that's a Malaysian OTC. All right. But now when I was doing my university and my master's days, I did a lot of math and statistics. I could only talk about math and statistics with my friends and they don't understand me. So I put that effort into trading system. So right now I'm designing trading system for a consultancy firm, international consultancy firm, and they provide that to fund managers, family office, etc. So it spans from trading in the Forex, into the stocks or in the indexes and different commodities. All right, but I think that this is a hard topic. So with this, I just like to share with you guys with the slides, right, to talk about what are the different trading systems so we can set the discussion here. So let me just share my screen. Okay. So if you can see my screen right now, in fact, that this was something I presented just very, very recently in a regional conference. All right. So they are mainly, apart from the different methods that we have, but there are mainly two types of trading system. One would be a mean reversion. What is a mean reversion trading system? It means that basically when prices are stretched too far away from, let's say, a price, for example, we have a stocks that move like 300 or 500% in a few days, all right, that's probably regarded as very far away from the mean price, then we might have a mean reversion trading system. It means that basically something is too high or too low and it has to resume back to its mean. Treat it as, for example, you stretch a rubber band and you stretch it too far, all right, and ultimately it was snapped, all right, so it has to revert back to the mean. So that's the first type of trading system. Basically, if you look at my chart, if price is too high, we do a mean reversion trading system and we sell it back to the mean. All right. The second type, which is the more commonly typed trading system, is a trend following. So for example, if the trend is up, like we've seen last year or 2 years ago, that the tech stock was moving very well. So anytime that it retraces or it corrected, so we just adopt a buy, which is a trend following system. So mainly these two types, there might be variations, but it shouldn't vary too far out from this. But I think that apart from a trading system, we need to know the trading style, which is basically the execution style. For example, such as a dollar cost averaging. So you have a trend following system. Basically, you buy, but you buy on a dollar average. So for example, you average every week or you average every month. Or it can be as complicated as a grid-based execution style, martingale, or just simply having a hard stop or profit. So that's a very simple way of a trading style. So let me just give a bit of perspective of what is a trend following system. So in my slide here, I have DBS stocks. All right, and what I did is I just put in, indications of trend. So trends such as a moving average. You can see this black dotted line here. It's a 40-week or 200 days moving average that gives us an indication that this stock DBS is generally going up. So we will adopt a mean reversion. So we will adopt a trend following system where every time it hit into, let's say, for example, near to the 200 days moving average, we might be looking at a buy. But sometimes when the stocks is moving too far, we might want to insert a shorter term moving average. But you can replace the moving average, right, with anything as long as it can tell you trend. We might add in combinations of indications. Like, for example, what I did here is simply just put in an RSI, which is an oversold RSI. So whenever it hits, let's say, near to a moving average, and to an oversold RSI that gives us an indication that it might be, in a way, cheap. All right, that becomes a way for entry. So this is basically a trend following system. The reverse that you can see is a mean reversion trading system. Okay, a mean reversion would be, for example, price is too far away from the mean. All right, we are basically adopting the opposite of the trend. So for example, DBS is going up, but we think that recently, or rather a few months ago, it was very, very high already. We might say that to put in a Bollinger Band that basically tell us that it's a little bit overstretched, put in, let's say, for example, here, a divergence indicator. All right, so that tell us that even if it's an uptrend, I would just temporarily be looking to sell, all right, when it's overstretched to the high. So these are the two main trading system. But I think that in terms of trading system, one has to take note your own personality in terms of the trading profile. All right, second thing is that most important to me when I emphasize is the trade management and risk management. And lastly, we have to be very clear what type of trading system you want to apply that to. So when I build trading system, let's say for the Forex or for the commodities like gold or oil, or for the stocks or different type of stocks, for example, some stocks are dividend paying and then they are likely not to move too much, or some stocks are really very volatile, then we will have to apply different type of trading system. So for example, if you take a look at this mean reversion trading system, all right, it's perfect if you are looking for short-term trading opportunities, because especially, where the price movement is going to be explosive. So you might want to apply certain trading system to certain instruments. Like for example, this set of trading system, the trade system, all right, I would be really considering that for some short-term instruments, like you want to use it for some short-term trading in stocks, or even to apply that in, let's say, DLCs.
All right. So thank you, Binni. This is a great introduction of, a trend following as well as mean reversion trading system. And I'm very glad that you brought up, instruments such as DLCs. And because today, right, we have in-house Marcus, who is the man himself, responsible for DLCs in Singapore, basically. So Marcus, from a product issuer point of view, right, how does what Binni has mentioned on the trend following and mean reversion trading system, right? How do you factor all this, right, into your product design process, such as, to allow entries, exits, risk management, etc.? So Marcus, over to you.
Thanks, Jay. So I think from what I got out of what Binni had just said was that there can be many different kind of trading systems, whether you are a trend following or a mean reversion. But it could even be a lot more different trading types of systems that, Binni has not highlighted. So we can't cater to all, but we try our best to meet the different needs of the different kinds of traders out there. So for the DLCs, for example, within this product class itself, we try to have as much variety and expand offering as much as possible. So for the DLCs, we can do leverage factor 3 times, 5 times, 7 times to cater to different risk appetites, right? For people who want high leverage or people who want lower leverage. And we also have both long and short DLCs. So the short DLCs is a very interesting point because it allows you to, capture short-term downtrends as well in the stock, and as well as particularly useful for the mean reversion strategy. If you think the stock has gone up too high, you can buy the short DLCs to capitalize on any correction on the underlying stock. And we also try to offer a range of DLCs with different sensitivities to the underlying asset performance. So a more sensitive DLC to the underlying asset performance would be best or ideal for scalp traders, those who are going for a few ticks, for example, while a less sensitive one would work for a swing trader or even an investor looking to hedge their long-term portfolio. So there's all different kinds of needs that we try to cater to with the DLCs. But all in all, lastly, I think we try to keep things simple as with your trading system itself. It shouldn't be too complicated that you don't understand it. So we try to keep it simple, and the DLCs is our answer to that. It is the principle behind the DLCs is quite simple in the sense that a 1% move in the underlying stock would generate or would translate to a 5% or 7% move on the DLC itself, based on the leverage factor. So in that way, you don't have to be too concerned too much about, say for example, for the Greeks or optionality impact or time decay or too complicated formulas itself. This formula is very simple. The underlying stock, DBS stock moves up by 1%, your 5 times long DLC would work by 5%. That's it, right? So we try to keep things simple, and so should you as well in designing your trading system. The more complicated it is, the harder it is to comprehend, and also the more things can go wrong, right? Yeah.
All right, great, Marcus. So, ladies and gentlemen, I think what Marcus brought up a very, very good point, right? You know, when you talk about complication and simplicity, right, is as good as, you know, when you are trying to steer the vehicle straight, and then you have to manage like 4 different steering wheels just to steer a vehicle straight, or whether are you just controlling one steering wheel and then you can keep a vehicle straight. I think the simplicity is very important, especially if you're dealing with a fast-moving market with many moving parts with different factors. So this as well, right? I would like to tap on Joey's expertise, because Joey has been a well sought after, you know, trainer, and as well as a, you know, trading for very, very long. So do you have, you know, how can you complement like what Binni and what Marcus just mentioned just now with regards to trading system? Because I understand you have your own as well. So Joey, over to you.
Hey, thanks, Jay. Thanks, Binni, everyone. Okay, so good. I mean, basically, I have a trading system, and I call it 1GT, which stands for one good trend. All right, so one good trend. So I believe like what you guys are saying, you have to keep it simple. Like sometimes if you keep it too complicated, you know, analysis paralysis, you probably don't know what to do, and you do nothing, and then you probably will lose money. So yeah, so I think Binni talked about like trend following strategy, and also like a mean reversion. Right, so mine would be, I would say something like a trend trading strategy. So we kind of like ride the trend, whether it's the uptrend or maybe downtrend. We kind of like take trades along with the trend at like high potential zones, and we have a system to guide us. So the system would, for me, later I can show you guys. Maybe I can just share my screen to see how a system can help you guys. Here, let me just pull out and share my screen first. Okay, so if you have been struggling, what happens is I think most people are struggling because, okay, let me just go ahead. Are you guys able to see my screen?
They should be able to in a while.
Okay, good.
Yeah.
So if you've been struggling, guys, this is probably why I think most people who do it pretty much the hard way, the wrong method, they just buy and hope and hold, you know, and just buying and no shorting. I think that all stocks are the same, all right, and pretty much averaging down with people taking profit too fast. So most people actually kind of like trade backwards, in my opinion, and because they don't have a system, it can't make it even worse. All right. So trade backwards means they cut your profits fast and you hold on to losses, and the losses become bigger and bigger, and it becomes a huge loss, right? And buying on gut feel, getting out at the wrong time, right? So I'll say that what is exactly a trading system is like one that is like what you mentioned, is a bit simple, all right? And you want to keep it systematic so that you can avoid the mistakes that 90% of people make. So you don't have to spend hours to search for winning stocks as well. And yeah, it kind of guides you and alerts you to certain counters that you want to look at, and then also guides you on when to get out as well. All right. And yeah, it kind of takes the emotion out of trading as well. So I think that's very, very important, because most of the time people let their emotions affect them. And when it affects you, you know, it affects you or emotions, you probably will just get very too emotionally attached to a stock. You hold on to it unnecessarily, and you know that's not a good thing, right? So I believe a system would have one whereby it's back tested. You have all the data, just of the win rates and all that, and yeah, that's how a system can help you. So for me, I have a system. I'll not talk too much about it, but you know, that's one whereby we had a couple of like bullish entry, like green arrow pointing up, a green bar at the bottom to kind of point as an uptrending stock. So we're gonna get in at high probability areas, green arrow pointing up. There's a bullish signal. We have an exit, another bullish signal right here. We've got an exit. This is one of those stocks, Joe Energy, one of those oil and gas stocks that have ran up as well. And even for like, I think Binni also mentioned a little bit on DBS. Let me show you guys very quickly. So this DBS right here, it's pretty much a strong uptrend. And I think Binni mentioned about the strategy whereby he had the system, and yeah, so same thing. We have a system. So everybody has their own system. It's about how you use it to your advantage, all right? And like, for DBS with a good signal right here, bullish signal, 1st December, went up, got an exit. So to see a bit of sell down when we had the Russia-Ukraine war, got bearish one, came down a bit, got exit, and this is where we are right now. So yeah, that's it. I think back to you, Jay. I think pretty much that's how a system can help us to avoid some of the common mistakes that most people, in fact, more than 90% of people make in the market.
Great, thank you. Thanks, Binni, Joey and Marcus. So from the brief sharing, right, of how you introduce this trading system, right, I think it's very clear that a trading system is not alien or is not like rocket science. And to sum it up, right, it is about having a set of rules to guide a trader or investor based on their entries and exit points. And the takeaway myself, right, is most important is to complement any trading system with the right instruments and one that provides flexibility, such as DLCs, like Marcus have shared. Because with DLCs, right, you will have different leverage factors. You will have, you are also able to undertake different directions to help you achieve the outcome that you want. And I think that is very important. So thank you everyone for sharing this. So this will lead me to my second question, right? Is now that we know what a trading system is and what they are, so what are the common pitfalls, right? Or the things, the important factors to look out for when designing a trading system? So this time, right, since Joey just touched on his 1GT system, right, I would like to direct this question to Joey. So how would you advise our viewers on how do they, spot out some of the common pitfalls, or what are some of the important things and some of the stumbling blocks that you have occurred in your journey to design your own trading system? Joey, over to you.
Okay, good. So I would say that, like what I mentioned just now, some of the common pitfalls or mistakes about a system is that perhaps it's not back tested. All right, so it might be just a very short period of time. So you want to back test it. So of course, I have my own developer that kind of do it for me. We become a very, very specific set of criteria. So we back tested it for like more than 10, 20 years of data. All right, and from there they're able to get like the win rate in terms of the winning performance as well. And so I think it's about back testing of the whole entire system, and then after that, building a plan for it. So I think, like, everybody have different kind of a strategy. So if you're going for more of a swing trading, position trading, so for me it will be more like trend trading, a little bit more swing to position rather than like day trading, like every minute you get in and out. We don't do that. All right, always a bit more swing to position. So probably have a system that kind of suit your style. All right, so you ask me to do day trading, probably I'm not very good at it. I mean, it's not my style. Right? I probably want to focus on like position and day trading. So build a system that is based on your style. All right, back test it. Back test it. Have a plan. Even though you have a system, I think it's also good to have a plan, because most people have a system, and most people have a strategy, all right? And if you want to make it even better, you have a system. But the thing is, you can have a strategy, you can have a system, you can have a framework, you can have anything. But if you don't actually follow it, and you let your emotions take control, that is one of the biggest and costliest mistakes that most people make, right? So it's not just about having all this thing, but actually being disciplined to follow it, to follow your plan. It's time to get out, you get out. If the system tells you to get out, you don't wait and you think and you give a bit of hope and hope that tomorrow will be better, but it's time to get out, you get out, right? So a bit more emotionless, and you pretty much follow your strategy and plan and just execute on the trade as you are supposed to execute on it. That's all.
All right. So Binni, you have I'm sure you have something to add to that, because from my understanding, you are a very, very diverse, very experienced trader across different markets as well, and you have different systems deployed across all these different markets. So over to you. I'm sure you have very, very good insights to continue to share with our audience.
I think let me just raise up one question before answering, right? Since we have many systems out there, and to me, my principle is that it's actually very easy to create a system. We've seen many systems out there and system sellers selling, but how come that people are always pursuing a holy grail? If they're always pursuing a holy grail, means that they are actually not profitable. All right, so there are some missing links here and there. So I just want to point out what are the missing links. Number one, of course, that when we do testing, we do back testing. But one of the things that we always, when we launch, let's say, a system, we always do the forward testing based on already existing data. And lastly, we also let the machine do some learning and training, and then we actually test it live. So that's one thing. Second thing is that I don't think that we should expect a trading system to be a golden goose that keeps laying golden eggs. Of course, then some people say, hey, look, how come your trading system doesn't work during this period of time? It is actually not so. What we do is that in the real world, we have different models running in different conditions. So for example, today, we think that it's a trend following system and it's not that volatile. We will just switch on that trend following system and have more risk allocated to that. But if we think that, for example, generally the environment is on a high risk, then we might want to switch on the hedging system, or we might have different system, right, switch on at different point of time. So that's the second thing. The third thing is that I think, as I mentioned, it's easy to create a system. That means it's easy to have a buy arrow plotted and a sell arrow plotted. But what's missing out there is that trade management and money management. I just wanted to mention that don't focus the system as entirely just entry and exit, but to focus mostly into, for example, the money management and the trade management. All right, so for example, you have a winning trade, and how do you keep on stagging in that winning trade? I think that a lot of people doesn't make money, not because they don't follow the system, but simply only one reason. They don't have time to trade, or they are not at the right spot to go and put in the trade. So when we design different systems, we consider this, and therefore in the current development, we have a lot of auto trading. That means that automated trading, but we still have human to retain that control, all right, to have that automated trading. That means we let the machine do all the tedious work, but yet we human make the decision.
Yeah, and I think it's very important to have a human to be available and around, right? Just to, in the event that the system is not operating in an environment that is created for, then the human trader must be able to step in and override this decision-making process. And before I move on, right, Binni, I saw a very interesting question, right, by Lee. So Lee, right, posted a question which I think is also on the burning minds of everyone. How often, right, should we review the performance of a trading system used?
Okay. Now, in terms of time, when one system doesn't fail, we don't really go and touch it. All right, because in the first place, when we design a trading system, all right, we always have a lot of tests, and we run it through quite a period of time. But for me, myself, I don't really touch the core, but I always keep on reviewing the market conditions, such as, for example, different variables. Variables such as, for example, that the market is getting more volatile. Should I reduce the risk amount allocated in the system? Or is that there are certain changes to the market, then we might want to stop trading at certain hours. All right. So for example, I don't think I think the review is actually constant. So once we see, let's say, a particular month or period of time where we had more than expected drawdown, and then we should be looking into not the backbone of the system, but we will always start off with looking at what are the things that we can tilt, which doesn't change the core of the method put in. And of course, then it depends on the different trading systems. So for example, if it's a hedging system, we want to hedge the movement of stocks and we want to hedge it with the commodity, then we might want to remove one of the hedging instruments, like we want to put in oil, and then we want to remove certain metal, or we want to put in silver and not gold anymore. So we look at a trading system in a complex way as a basket, but just not a single entry and exit. Yeah.
I see. So it is more like because there's so many moving parts, right? And from my understanding is that at any one point in time, right, we are always juggling, we are always monitoring and thinking that, okay, maybe this is not working, that is maybe going to work. So we are always changing, and the situation is always fluid and dynamic. Is that what you're saying?
Yeah, we don't change the backbone of a system. We don't change, for example, the core, but we will modify the variables. So variables such as we will trade that particular system 24 hours, but perhaps we monitor that it gets very volatile on a Friday night close. So we will stop trading 2 hours before the US market close, for example. Just by doing this slight variable, we might be able to reduce drawdown, that means losses, and we can increase that profitability. So we don't really modify the core system, because when you develop a system, it takes a long time for testing. We will work on the variable first.
Yes, okay, got it. Thank you. Thanks, Binni. So Joey, how often, right, do you think we should review the performance of a trading system?
Okay, good question. I would say that, we like what Binni has mentioned, I don't normally make like changes to the trading system or the specific criteria every single month or every single year. So I think probably you can review it maybe every like 3 to 5 years. That's where if there are major changes in the market conditions, depending on the volatility, the VIX index, the trend, you can make minor changes, but I try not to touch too much into it, because all these criteria have been fixed. So you can probably just make minor changes, but not to like what Binni said, the core is the same, or the whole entire framework remains the same, but you make minor changes, that's fine. It can maybe help a little bit of performance, but you must be careful because it can go the other way around as well. All right. So of course, all these have been back tested. So if you feel that it's good enough, you can leave it that way. All right. But I would say that, trading system apart, it comes out with entry and exit signals, but like what Binni has mentioned as well, is also to do with about following it. All right. And also having a plan, because if you have a system and you don't follow it, then it doesn't really matter, whether how good or not it is. Yeah.
Something to add, right? I don't think that is that we don't follow it. Sometimes it's beyond the control of many people. So for example, I have a signal that's going to come in at 10 o'clock, but I'm having a meeting. So it's not that I don't want to take this signal. It's just simply I can't take it because I'm having a meeting, especially for people who are working. Or for example, many people can follow a system when it's making money. When it's losing, they cannot follow that system. So I think that it's not something where we say we don't want. Okay, we can have arrows plotted to tell us that you must sell, 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 and every day it's going to come with a sell arrow. Whether you do it or not, that's a different case. And this is something I want to bring out of a system. That's why myself, I believe in semi-automations. All right, and actually I've outsourced most of my trading to the robots. What they do is that they handle that menial work of placing the trades. They handle the work of managing the trades. I just have to decide whether I want to deploy them or not. Yeah.
Cool.
But I think that one thing I want to bring up is that I apply different trading systems to different instruments though. So for example, I mean, with Marcus here, we talk about DLC, that the set of system I apply to DLC will actually be different from the system I apply to my REITs. Yeah.
Cool. So, a lot of traders, right, and investors, I think their main focus would just be on, when should I buy? What should I buy? How do I get out? But I think often, right, they also missed out this, secondary dynamics, which is what Joey and Binni has always stressed on. It's about having a plan. It's about following the plan, knowing the context of how the system is being formulated. But I think one very overlooked portion, right, is while people are always focusing on the trading system itself, but they often miss out on, the instruments or the products that they are using to follow the system. So, Marcus, especially in the context of trading DLCs, what are some of the common pitfalls, right, that traders will encounter when choosing the products to trade on, and what are the things to look out for specifically when they are using DLCs to execute their trading? Marcus, over to you.
Well, thanks, Jaitun. And I think I totally agree with Joey and Binni in a sense that for someone who is developing a trading system on their own or even taking it from someone else and using it, it's very important to understand how your trading system is designed, at least fundamentally, right? You don't have to go too much into the detail, but at least fundamentally, what kind of system is it? Is it one that shoots out signals every day, or is it one that shoots out every week, or is it every hour? And then you should also align it to your trading style, right? If you are not someone who wants to trade so actively, then you have to find a system that probably only looks at the weekly time frame or the daily time frame. But if you're a very active trader, scalper, etc., you should be looking at a trading system that looks at the hourly time frame or the 4-hourly time frame. And that's something that I believe in. And so we also it's also very important to understand how your product is designed per se. You don't use an ETF if you are looking for a day trade, right? For example, sometimes it only moves maybe 1 or 2% a day, and then you won't be able to make much gains from it. But if you're looking at a daily time frame or a very short-term time frame, then you want to use maybe leverage in your product. You're looking for leverage, and you're looking for something that is efficient in your capital because you're only going to trade it for 1 or 2 days. So it's important to understand what kind of product are out there and what is designed for. The DLCs are designed for short-term trading, whether it's intraday, a week, or even a few weeks, but it's definitely not a buy and hold product. Okay, it's not like an ETF where you can buy and hold, because the compounding effect of the DLC and the holding cost of the DLC will erode your long-term returns in that sense. So finding the right instrument, understanding it, and applying it to the right trading instrument is very important, and to see how it caters to it fits and aligns with your trading style. Your trading style, your trading system, and your product should all be aligned for you to be able to be successful in that. And last thing I wanted to add also to this sharing is, I think it's important to trust your system, but it's also important to consider all possible scenarios and all possible options out there. Right? You should always keep an open mind. You don't be too fixated on your trading system or your trading style, or even the product that you're using. You should be open to all kinds of options, and that's why I think it's important to also consider various products out there in the market, whether it's an ETF, whether it's trading a stock itself, whether it's trading a DLC or a CFD or a structured warrant. Keep your mind open, learn more about them so that you can apply them to your different trading styles as well. So for the DLCs, maybe I can just very quickly share. We have Just a very quick scenario, comparison of how the DLCs differ across various leverage products out there. But first, why would you trade a DLC over a stock, for example, right? Instead of buying a DBS stock or a Tencent stock, why would you want to trade the DLCs? Well, the DLCs can provide that capital efficiency. If you're looking at a short-term time frame, trading for a week or a few days, you might not want to put the full capital that you have to pay to buy the BS stock or Tencent stock, but you can use the DLCs, which is at a fraction of the cost of the underlying stock, to be able to gain exposure to the DLCs. And you can use the leverage as well, right? And the DLCs are listed on the exchange versus another similar product like CFD is not listed. It is on over the counter, whereas the DLCs are listed on SGX Securities market. So you can trade it through a regular stock brokerage account. It's not a margin product like your options, futures, and CFDs. So there is no risk of margin call. It means that your loss is actually kept at your initial capital. Whereas for those margin products, it could, potentially lose more than your invested capital. And for comparison to structured warrants, it is a bit more simple. Like I mentioned just now, every 1% move in underlying stock will generate a 5% move on the DLC. So, and also there is no optionality impact. So there's no time decay impact volatility. But yes, the DLCs have a very unique feature, which is the compounding effect that is unique to DLCs versus the rest of the products, right? So it's important to really look at the different products out there, the range of possible options, similar to how you go through the process when you're designing your trading system, be open to it, and also ask yourself, what kind of trader are you before you design the system?
Something to add on to what Marcus mentioned. I mean, for me, myself, when I trade DLC, what I like is because your DLC is based on Hong Kong stocks. All right, if you compare Hong Kong stocks, right, versus Singapore stocks, is that a lot of time when it moves, it's really move a lot. So it's not difficult to find, for example, Hong Kong stocks that can move like 10%, 15% a day. So for the trading system I apply for the DLC, I have this, style which I stack on my position. That means the trading system itself actually keeps on adding to a winning position because the cost of trading the DLC is actually cheaper, much cheaper as you compare to different instruments. All right. And as I mentioned just now, the trade management and risk management is very important. Perhaps I just take this chance to share with you guys, since we're on the designing of a trading system, right? What is the core aspect that maybe I would say professionals, not myself, but professionals emphasize on? We emphasize very much on that trade management and position management. Okay, I think that I just take this quick time to share a video that is about a minute or less than that. All right. I hope that you can see this video. So this is a system that I've designed which emphasizes on trade management. So basically what it does is that it has an auto entry. All right. Second thing is that it will automatically take profit, but on the winning, let's say trade, right? It will keep on shifting your stop loss that minimize your risk and keep on stacking. So this is one part that I use, right, when I trade the DLC, because I realized that the DLC, it can move a lot in a single day. So at every price point, right, we can keep on adding to that, winning position. So for example, you can see, right, it keep on shifting that stop loss to minimize the risk and as it tap into the price movement of a certain instrument. So of course, this one is not DLC, it's one of the systems that I've designed, but it just work on the same idea that trade management is a lot more important than the entry and the exit. All right. So just so lastly, you can see the system is focusing on that trade management. So apart from designing, let's say, an entry and exit, I think that constant monitoring and to overcome the fact that we are not able to be in front of the screen to do that trade. All right. So perhaps that when we design a trading system, we need to incorporate that trade management inside. And definitely a short-term instrument like DLC, it's a very good for that kind of keep on adding system.
Yeah, I like the auto add function. The DLCs work best in a strong trending market. So if you capture the right trend and it auto adds all the way, you definitely will be able to achieve more than 5 times the return because of the compounding effect as well.
Exactly.
So yeah, that's good.
Great, awesome. So thanks Binni, thanks Marcus for sharing. And I think to sum up the two of their viewpoints, right? As a trader, I think most of the times we are overly obsessed with just the mechanics of the trade, the entry, the position sizing, and we often know what to buy, but we do not know like when to get out. Do I lock in my position? Do I add more? Because when money is concerned, right, and where you are looking on the platform, you're looking at it, you're looking at a position, you'll always be thinking about all this dynamic, all these variables. Should I buy more? I should have bought more here. I should have got out there. Well, in hindsight, it's always clear. So with the, the implementation, right, of a trading system, and I really, really like what Marcus mentioned just now, which is to have alignment in the trading style, which is emphasized by Binni and Joey. Then the time frame must also be aligned to your lifestyle as well. Because if you have a full-time job, it is very unlikely that you can trade, be in front of a screen and do day trades. And most importantly, right, the instrument can come in and complement that, of which, DLCs have very, very good flexibility, direction-wise, leverage factor-wise. It helps to complement and achieve the results. And most importantly is to have the alignment in all these three factors. So, Joey, do you have something to add?
Yeah, I mean, I quite like what Binni has mentioned in terms of the video on the trading system. I can see that it's really quite comprehensive, and I think it kind of like focused a lot on the stop loss. I think you can see that as it moves up. I think that's what most people don't do as well. I wanted to share, most people, when the stock moves up, and they kind of like get a bit more greedy, they might buy more, or, just whack, and then they don't really think about like protecting their profits. But I can see that, in the system that Binni shows, it is quite clear that as it moves higher, there's a very, very clear kind of like a support that follows or trails upwards. And when it just broke that support, it was like automatically get up, right? So that's a very good system. I mean, not just a system, but in any strategy, I think if most people, when they make money already, they do not actually think about like protecting their profits. They're thinking ways to make more. Of course, if it goes up more, it's good, right? That's the best thing, right? But the thing is, what I normally teach and what we do is that we don't want to lose money when we have already made money, right? So if you have bought a stock and it goes up, you are above your break even, you are definitely making money, right? So we want to take steps to make sure we protect that profit. So I think that's key here. I mean, we can learn something from that system as well to show that, if you're already making money, you can easily just shift your stop loss, whether it's manual, is it a computer, auto, robot, whatever. Just have a simple order to kind of like protect your profits. It pushes down below a certain level, it breaks a certain support, you get out, you still make money, all right? And that's how I think it's very effective, especially like what Marcus had shared as well, and in terms of DLCs. I mean, it's a bit short term, right? So I kind of like agree with what you mentioned in terms of like the time frame, the trading system, it must cater to your style as well. And if you're using DLCs, there's like a bit more short term, not really like buy and hold and don't care about it, right? It's a bit more short term, a few days to a few weeks maybe. So I think if you can use DLC and you kind of like take steps to protect your profits, you have made it. If you already made the profits, then I think it will greatly increase your chances of consistently profiting in the long run as well. Back to you, Jay.
Sorry, I just want to add on, Jay, because
Yes.
for me, right, it's not a trading system gives us an opportunity to buy and sell. But I think what really lose money, right, it's not the fact that we don't know how to buy. It's not the fact that we don't know how to sell. It's just that when you hit into, let's say, a certain level that we shouldn't be holding anymore, the emotion aspect just stop us from doing something. For example, you know that this is good stock, but it has fallen by 30%. The rule is to cut loss, but how many people really cut that loss? Sometimes they will hold on to 50%, and ultimately they will just throw it inside the fridge. So the good thing about a trading system is that these are hard rules. These are math inside. These are robots that manage, and they have no emotion. When they cut means cut, there's no holding back and say, I'll wait for the next day. So this is one aspect of a trading system. The second aspect is that it's not only at our job, because sometimes when you look at trading round the clock, 24 hours, certain things happen. All right, we might not be working, we might be having dinner, and we cannot be staring at a screen and say that, hey, look, I'm just going to stop all my social gathering. I'm just going to stare at the screen and not to do anything because I'm trading, I'm trying to make money, right? So it shouldn't be done that. So a trading system should have that certain elements to help us to become better. Yeah, so I think that should be the component of a trading system. Apart from that, what I'm trying to showcase is that automations, it rid of, in the case, right, I always say, right, it helps us to get rid of our weaknesses, okay, and outsource the menial work to the robots. Yeah.
Yes.
I think for like trading system, it's sometimes I think the most important thing, right, is you can always go and pick a trading system. You can always go and change the parameters. You can always don't listen to the signals. But the most important thing I think is accountability. Having a community or being accountable to someone will actually be a very good driving force for you to be more disciplined and to actually follow that. And I think if you join Binni or Joey's community, etc., I'm sure you'll find that pressure to be accountable to someone, and that works very well for a disciplined trading system.
Yeah, definitely, for sure. I mean, it's always easier, right? There's a saying, right? If you want to go fast, you go alone. But if you want to go far, then it is always better to go ahead with, like-minded individuals, with a community like the one that Binni and Joey has, which I think it really will bring your trading journey, much further, because the starting part of a journey is a lot of uncertainty. Speaking from experience myself, 12 years ago, right, when I started, it was a little like, what am I watching? What am I looking at the market? I also don't know what am I seeing. So it feels a bit like disheartened. I feel like giving up. But with friends, right, with like-minded individuals, it's always easier to continue this journey on. And I think Binni brought on and touched on a very, very good point. It's like, having technology, having trading systems, right? It's like having a calculator. And now, back then when we were in our primary school and we are learning our arithmetic, right? We are not allowed to use the calculator. But right now in the real world, in practice, the technology actually solves a lot of problems for us. And these are all very real problems, such as, when you are having a social life and you're having a time with at work or with your family, you don't want trading to intrude into your life, whereby you have to change your lifestyle to suit trading. It should be the other way around. Trading should be, suited around our lifestyle instead of the other way. So therefore, we are able to go much further and enjoy the journey. I think this is the takeaway point from what Binni, Joey, and Marcus have shared. So over on the questions, right? I see some very, very good questions over here. So maybe let me touch on one of them. Casey, do you think short-term trading is better than long-term investing? Any known trader that becomes rich by trading? Who would like to take the question?
I will take this one first.
All
right. So, for example, I have long-term trading, my REITs and my bond. Long-term investing, my REITs and my bonds and my unit trust that is across Asian and America, and as well as commodity, etc. So that's really long-term. All right, 3-4 years, sometimes even 5-6 years. But I'm also super short-term because I will do forex, gold, oil, commodity. As well as indexes, futures, DLC. I mean, whatever you mentioned, I probably am doing it already. So I wouldn't say I'm actually rich, but I can say that I tried to quit my job, right? 5 years ago, or maybe like 7 years ago? I tried to retire by looking at the grass, but it's not that it doesn't work out, but it gets so boring. But what is really required is this, right? While you are trading, there will be, especially for new traders, right? There will be a lot of moments that you feel very sad and very depressed, and especially demoralized, because then when you win, I probably don't feel anything, but when you lose, right, you're going to feel very, very sad. So most important, maintain that portfolio of long-term, where probably every month, even if you are not winning from short-term trading, you should get an income. So this is what I do. All right. So recognize that, let's say in a 12 months period, there will be up and down months. Okay. So when let's say you have an up month, try to make sure that you eat as much as possible. When you have a down month, try to minimize and then not to lose that much. Okay. Any known traders that becomes rich by trading? I think there are many. I think that they are probably not telling you also.
Yes.
Maybe I can add on a little bit on this point. That's okay. Yeah. So basically, I mean, in my experience as a broker in Phillip Securities, I realized that most people actually start off short-term trading, right? They start off short-term trading, you want to make some profits. But the point is that when you lose a little bit of money, it suddenly becomes an investment. All right, that's what I realized. And a lot of people, I look at their portfolio, I advise them on their portfolio, and they become a long-term investor. All right, not because they want to become a long-term investor, like, there are REITs, there's a dividend income and their stocks. No, all right. I realize that most people become a long-term investor because they have no choice, right? They have no choice because they're holding on to a portfolio.
They live for their grandchildren.
Yeah, correct. Because they have no choice, because they are sitting on losses. So they suddenly, from a short-term trader, they become a long-term investor, not because they really wanted to become a long-term investor, right? So I think the point here is that, it's good to have two kinds of portfolio, what Binni mentioned, right? So you're on short term, it's fine, but make sure you keep it short term. Don't lose $200 or lose $1,000, suddenly you become long term, all right? And if you want to have a long term portfolio, go for it. Then make sure you build a longer term portfolio, whether it's a REIT portfolio, 5% dividend yield and all that. Go ahead, but yeah, that's a long term. But don't mix it up and from short term you become short term just because you lose some money. Yeah.
Yes, I think that's extremely important because it's not, we should not be turning an intraday trade into a swing trade into a position trade, and then a position trade into a long-term investment that, never mind, give it enough time, you'll come back, So I think that's very important. And I saw another very good question by Casey. How do we hedge, equity exposure with that of commodity? And I would like to repurpose or reframe this question a little bit, right? And Marcus, let's say from an end user point of view, how can we use DLCs to actually achieve this, right? Are we able to do it to hedge the equity exposure with that of commodity, or to maybe hedge it with, maybe we don't have to be doing it with equity, commodity, it can be between equity as well. How can we achieve this using DLCs?
Well, there can be a few ways, Jay. So I think the most direct way would be to buy a short DLC, right? If you think you've got a portfolio of stocks that you are, holding on for your long-term investment, right? Whether is it by Joey's definition of you wanted to trade it but become long-term investment after that when it goes into the rate. But whether you want to hedge it or not, you can use a short DLC, whether is it directly on the underlying stock itself. So like, for example, a DBS short DLC to hedge against short-term volatility. Or whether you want to just take a broad market approach, you want to go short on the Hang Seng Index or the STI or the MSCI Singapore Index, just a broad market sort of hedge because you think there'll be a short-term, correction in the market. You can use the short DLCs and choose your leverage factor, whether you want a 3-5 times or 5 times or 7 times leverage to go hedge against some of this short-term volatility. For commodity plays, right now we only have equities. So whether is it equity indices or equity stocks. But within this realm of over 50 or 60 stocks that we have, 50 Hong Kong stocks and 30 Singapore stocks that we have, you will find some of the commodity plays in there, like your Wilma, like your CNOC or your Petro China stocks that you could also use the DLC to trade them, whether is it to long it or whether to short. You could use them as a commodity exposure as well. So I think that's one of our things that we try to do. We try to offer as many sort of underlying stocks as possible to give you that many sectorial sort of like approach.
Okay, cool. So Joey, I see this, there's this one question, right? I'm also curious, by the way, how can the 1GT system be applied on other assets and market class, other asset classes or markets besides equities?
Good question. So, basically 1GT stands for one good trend. It's just the name I have for my system. And behind this whole system is a framework whereby, as I mentioned, we talk about trend trading. We want to time our entry at areas of value whereby we want to increase the odds of winning in an uptrend or maybe in downtrend. I think about taking short positions. So for the system that I have, right now, we only cover the equity market. So basically the Singapore, the US, Hong Kong market, even the Malaysia market, we have it on the system as well. And also we cover indices as well. So we don't have like futures or commodities as of now, but in the future, probably. But mainly if I focus on the equity markets and, but the system itself, as I say, those entry and exit signals, that is where it kind of like shows on this market, the equity markets, but in terms of the framework behind the system, in terms of the core framework understanding, I think that can be applied to any indices. I mean, any charts, any oil, or is it crude oil prices or commodity or gold? It doesn't matter because basically, as long as the framework, it makes sense, it's right. You follow the core criteria, that still makes sense as well.
Okay, great. Okay, thanks, Joey. So one more thing, right? Let's say besides, because today our topic is very, very heavily concentrated on trading systems, right? So about triggers and all that. So besides a trading system, so we now know that we need to have a trading system that have worked out rules, that have been back tested, robust rules that requires forward testing as well. Once we have this, right, the trading system needs to be aligned to our lifestyle, needs to be aligned to our trading style as well. So this alignment is very important. And on top of that, we need to use complementary instruments to help us achieve the outcome. So besides trading system itself, what is the one thing that investors will need? And this time, right, I would like to pose this question to Marcus, because I'm sure he has insights from his background with product, with the issuance of this product, right? How he will have insights to share with us regarding that. What is the one other thing, right, that investors and traders will need, Marcus?
Well, this one I think can be posed to all of you guys as well, Binni and Joey. You guys have seen a fair share of traders out there. What do you, one thing that you need, whether it's discipline, whether it's trust, whether it's a big war chest, I don't know. But from my perspective, the one thing that I think investors need, of course, is a good product. Okay, you need to have a good product that you can trust, that will help you to deliver, the final leg. After you have your trading system, you have your view, you have your war chest, you have enough bullets to fire. Then you need that last leg of that product that will deliver the returns for you, right? So you need a very good product that you can trust to deliver that performance, right? So if you are looking for leverage, number one, or you're looking for flexibility, number two, and you're looking for efficiency, number three, then you can consider the DLCs, right? Leverage allows you to capture the short-term opportunities in the market that your system throws up and able to maximize your return. And of course, any losses will also be magnified. And for flexibility, in terms of volatility, like the past week this month of March has been a crazy month. You've seen the Federal Reserve increase interest rates. You've seen the China, Hong Kong market go V-shaped, right? And you see the Ukraine crisis as well. So in terms of volatility like this, it's useful to have a long and short instrument that you can use to capture both opportunities on the upside as well as on the downside in both a bull and bear market, or even to hedge your portfolio if you want, right? And also lastly on efficiency, right? The third thing I stress, efficiency is, instead of putting in, $10,000 to buy the stock itself, for a very short-term trade of 2 days or 1 day, $10,000, you're charged commission based on that, you're charged transaction costs based on that. You can use for instruments that are able to give you that capital efficiency. Use the DLCs, which is at a fraction of the cost of the underlying stock. And you can get exposure to the underlying stock using the DLCs with a fraction of the cost. And then this allows you to really deploy the rest of your capital for your long-term investment, or for other kind of investments that you're looking at as well. So leverage, flexibility, efficiency, this is what the DLCs do provide for investors out there. And that's why I believe it's a good product that every investor should have in their sort of portfolio to use tactically in times of volatility.
Definitely. Thank you, Marcus. So I also see this very, very interesting question, right, by Sean, right? Is it typically how many indicators will a trading system include, and how do we deal with conflicting signals? Binni, would you like to share more on this? Because I'm very sure you have seen a lot of traders starting to pound indicators one after another. So how should they deal with this?
On the professional levels, when we build different systems, we always look at what the system want to achieve. There are certain systems that doesn't have indicators at all. What they will do purely is hedging across different instruments, arbitrage systems. All right. So I would think that if you ask me for retail, the focus shouldn't be on indicators, but should be on the price action itself. Although usually for prices, right, it's a lot more difficult. So just now I actually shared a typical system, which is combined moving averages. You can replace the moving averages with things like Ichimoku or any other things that shows price. And then you want to have indications to point to you whether it's cheap or expensive. And basically you have to differentiate whether it's a trend base or is a mean revision base. And then try not to have too many. I would think that if it's just a straightforward answer, I would just say 1 or 2 indicators at most. The rest will be focusing on price. The trade management and risk management will be most important. For example, you have accuracy of only 40% or 30%. That system can make money if your trade management and your risk management is proper. How do we deal with conflicting signals? In the first place, you as a designer, we have to know where these conflicting signals come from. We have to filter that out. I think that you also have to cater that there are different market scenarios. You might have to build not only one, you might have to build 2 systems or even 3 to run at the same time. Other than that, I think time is very short for me to really elaborate because there's a lot of factors when we consider on the professional levels. Yeah, but just briefly the answer.
Okay, thank you, Binni. So Joey, how do you deal with conflicting, signals in your experience of creating your 1GT system?
Good. I mean, for me, as I mentioned, I try to keep it simple. So, I mean, we don't do like so many indicators and make the chart so complicated. All right. We look at a few moving averages for trend. And what Binni mentioned, we look at prices, price action, candlestick. I think that's key, right? Not just like 5 or 10 indicators and all saying different things, you get messy. So I think that in terms of conflicting signals, it really boils down to how you create the system. I mean, you create one whereby it just points all over the place, then it doesn't make sense, then no point. So if you keep it simple, you follow it, you backtest, you have the conviction for it, then you kind of like follow it and you test it. If it works, it works. So if not, then you might need to relook at the criteria again. Why are there so many conflicting signals? Are you adding too many things or what, right? So you have to make the changes to make sure that it makes sense.
Awesome. Marcus, you got
and
anything
make sure you don't trade. If you see conflicting signals, make sure you don't trade. Don't go on gut feeling. Don't distrust your system. If it's conflicting, find out the root cause, etc. Just don't trade. But AJ, so don't mind if I actually just very quickly just share. We do have a booth, SocGen. We do have a booth in the exhibition hall. You can find our logo there, and you can click into it. We have limited time here, but you can find out more information about the DLCs as well as the Tiger and Phillip broker promotions on the DLCs over there as well. But more importantly, you can also have a chat with me after that. So I'm happy to answer more questions on the DLCs. And also we do hold regular sessions with Joey and Binni on SGX Academy events. So please do look out for that as well.
Awesome, great. So everybody, so I hope that we have a great session today, a good panel discussion. Thank you, Binni, Joey, for sharing your insights on how do you build up trading system and what are the pitfalls to look out for, and especially thank you, Marcus, for highlighting what are the options that a trader will have when it comes to executing the trading systems and how can they better even achieve their goals. So like what Marcus mentioned, there is a booth in here. So do reach out to Marcus and check out more on DLCs in their booth. So now we have reached the end of this panel discussion, and I would like to hand it back over to Edward. Okay, so Edward, over to you.
Thank you so much, Jay. And thank you also to our panelists, Binni, Joey, and Marcus.